Well, welcome to what month are we? May's Wednesday webinar. We're in our DI series and we have Christy from Assurity with us today. Thanks for hopping on, Christy.
Of course, I love spending time with all of you guys, so want to do anything we can to help out and have a little fun while we're doing it. So, well, today, I think one of the things that we hear the most on the company side is how do I have a conversation and how do I know if I'm approaching someone? Like, how do I try to look for those clients? Is there an ideal client or certain markets that are good? And so today I want to talk about how a surety can really fit in there and be your special teams. Now, I know that's a term that is typically heard in the world of football, but I think the same thing happens for all of us in this business too. Sometimes we go to meet with the clients, we kind of have like an idea and a plan for how we're going to attack that meeting and come out successful. And then, as things happen in a football game or a basketball game, sometimes the client totally turns it around on us. They want to look for something else. So what's really important and what we can help you with is just being prepared for those situations and look at some of the markets and how to kind of turn some conversations to help you lead to sales. So today we're going to focus on some specific occupations, and then I'll talk about how to approach those clients and what that opportunity is for you. So first, I want to start with the medical markets. Now, you may think it's kind of funny I'm talking about that, just because we know there's agents that do go to doctors, go to dentists, and it's really easy to get those sales. They work with conditions that cause disabilities and other serious illnesses every day. So when someone brings up an insurance that helps protect them and their family, they are the first ones to buy it. However, the one thing that we've noticed throughout the industry is while the doctors are getting accurately, provided for with insurance benefits, everyone who actually does the work to support the doctors tends to get avoided. So the situation, if you're approaching with a doctor and they tell you, I already have coverage. I want to talk about how quickly we can really turn that conversation to people that work for the doctor and try to get that nice handoff or you can start those conversations. Now, this case study example I'm going to share with you actually was a case that did end up coming to us here at Assurity, but we still use that same technique. So this case, we actually had a young dentist who was in the process of buying out the practice for the dentist that he went to work for once he graduated from college and from dental school. And part of that process required him to get some life insurance benefits to cover the loan, as well as some disability insurance benefits. Now, unfortunately for this client, he was born with some health conditions that made him ineligible to qualify for traditional disability insurance. I know that's one thing we do run into a lot in the business is, when you go back to the client with that decline, sometimes that does kill a sale. But here, we're able to offer a great benefit plan that does take into account some of those health conditions and still offer a benefit, just offering it with a first 2 years of it being a graded benefit. So in this situation, we were able to offer $12,000 of benefits for this client. And we worked with the agent to make a plan because this agent just impressed this client. They didn't think they would be eligible to get disability anywhere once they were declined. So he's already got that client, really in good spirits for working with this agent and is going to be more willing to share other opportunities. So we kind of worked with the agent and kind of coached him up on how to have that conversation and talk about with the dentist, is there anyone else in your office that would have the same impact you would if they were to become disabled? And from that, we actually received some additional sales. So one of the most important people in a dentist's office is the office manager. Usually it's just one person. They are setting the appointments, checking everyone in. They're traditionally running everything through insurance. They're taking care of putting the orders in when, the dentist needs more toothbrushes and travel toothpaste to give people when they're done with their appointments. They're doing all of that. Well, this dentist manager had been with the original dentist of the firm, so very experienced, had been there, but never had been offered anything for disability. So in later ages, this office manager has seen more people with disabilities just in her own age group that have gone on to be long-term effects. So she was very interested in purchasing something that would get her potentially to her retirement years if something were to happen. So here, we did just a basic plan. We kept it really, really easy for her, $2,500. It just covered expenses and a little extra cash to put away. We did add on the catastrophic rider. Just at her age, she's not eligible for a to age 65 benefit, but we know she still probably has a good 5, 6 years in her that she's going to be working. So we added on the catastrophic rider. That way, if she does have a disability that is a little more serious where she can't do the ADLs, we would continue to pay that benefit through age 65. So great way to get started with the office, offering something there. The next most important part in that office is the dentist assistant. So this is the person that works alongside the dentist when they need to fix a cavity, a cracked tooth, whatever it may be. So this one, a younger person who came on with the dentist, so someone that he's planning on having stick around for a while, we were able to offer a plan for her at her full income. So we offered $3,430 benefits, and we did add on some additional riders. Own occupation for someone who is standing or sitting in a tall chair and using their hands all day long. We thought own occupation is a great fit here because if she breaks her hand, she's off work. For people like us who work at a desk all day, we would still be able to do our jobs. It may take us a little longer to type things, but we would still be able to do our jobs. She would not. Also, since she is young, was very important for us to add on that guaranteed insurability rider, which, as she continues with this dentist's office or any other office in the future, she'll be making more money. And this will allow her to purchase more coverage without providing any type of insurability information. So if she's had a health condition, that will not matter. She will still qualify for coverage. That was actually the thing that sold her, just because she is a little bit younger, and we tend to see a lot of younger clients kind of still have that invisibility factor that they try to live by, which is great, until something happens and now they're uninsurable. So using a feature like that guaranteed insurability rider to bring up as a big benefit for her was what sold her on purchasing the plan, because she knows in her job that in 10 years she should be making this dollar amount, 20 years she should be making this dollar amount. So knowing she would be able to do that was the selling point. Now, of course, there's no dentist office that runs without having hygienists. One thing that we have noticed with a lot of hygienists that we have been working with lately is a lot of them actually work part-time at 2 different offices. So it could be 2 different offices under the same firm, we'll call it, or just 2 different offices. Just because a lot of times we have some of those hygienists that have been full-time, and so some of the younger ones coming in are only working part-time to kind of fill in for the new appointments with the new dentist, or just find that dentist offices are only operating on a part-time status. And so, they're usually getting 20-25 hours. So here we had 2 hygienists that were working about 25 hours on a weekly basis. One of them does have a second job as well at another office. And so looking at the income, we really thought for them, the more important thing was looking at a short-term disability. Just since they had multiple options for them, there's always a need for dental hygienists around the country. So they knew they'd have some success if they needed to find another job or find a full-time job, but were very, very aware that if something happened, it would have an effect on them and their families more on that short-term basis. So here we were able to offer just based on income and age and the dollar amounts we were looking to stay under. Our older client, who was 53, wanted to make sure we kept it under $100. So we went with that 0-day wait for an accident, 14 days on a sickness with a 13-week benefit, and we kept it at $93. So we fit within her budget and within her needs of wanting coverage that is fairly quick. For our 42-year-old client, was interested in a benefit that would last a little bit longer because she did receive long-term disability benefits at the second job that she had. So we wanted to make sure that we were able to offer something that would kind of encompass both of those occupations for the first 26 weeks. Wasn't really a concern on the price because she knew it would cost a little bit more, especially being a short-term plan. But we went with a 14-day wait, and we're able to offer her $1,000 on a weekly basis for $163. So back to thinking about that agent, or this could be you as the agent, like what would this look like for you now? So that dentist case, that made us $5,438.28 for a weighted annual premium. The next 4 cases we wrote made us $6,199.68. So just to show you 2 things. One, those high income earners, obviously they're good ins. However, when you look at the supporting cast or the special teams, they're ones you're going to make more money off of, and you're also going to get many leads because a hygienist knows 20 other hygienists that they went to school with. That dental assistant, again, probably knows 20 more people that they went to school with that they can refer to you as well. They may have clients that sit in their chair that they have conversation. I always think it's fun when you're sitting at the dentist, they try to have a conversation with you when they have their hands in your mouth. But there's always that little bit of conversation. And so they may even have some other people that, hey, next time Lee comes in my office to get his teeth cleaned, I'm going to mention something to him too, because, from our conversations, I know he may actually be interested in this. So definitely is one that can lead to additional sales, but just to show you that you can still have someone who is successful and making, a good bottom dollar, writing that office staff. So the next case I want to talk about is looking at the real estate market. So I know a lot of people kind of get scared when they're thinking about offering disability to someone who is self-employed. It's a little scary because, most cases there's not a situation where there's group benefits. However, a lot of them don't. How do I address those questions? How do I get a group benefit? How do I do this? Like there's a lot of agents that avoid these markets for that reason. However, I really think about the real estate market as a huge opportunity for 2 reasons. One, how it kind of relates to the insurance business itself. We have real estate agents that are, as we could call, they work under an agency. So think of like the KAFL of the insurance business. Think about that as the real estate business. There are some big offices, and some of them, even though they're not W-2 employees, they receive benefits. They may have opportunities for group insurance or worksite benefits. And also sometimes their pay gets tied around that firm, where all the pay on the sales goes to the firm. The firm takes their piece out and passes the rest on to the agent. This real estate agent still is considered self-employed, but they're using a company to help them with their business. The second side of that is the independent real estate agent who kind of just does everything on their own. We have one here in my hometown who has been in the business for 40 plus years. And for some reason, he still gets some of the biggest, coolest houses to sell. And that's just because of, his reputation. So he does everything himself. He doesn't have any type of benefits unless he has actually gone out and searched for them on his own. So the one opportunity in this market is finding those independent agents. They're definitely going to be interested in having conversations with you on disability insurance, as well as any other products that you may want to offer them. Now, for the ones that work for more of those real estate firms, there's still going to be interest there at the higher level to pass on as an option for all of the agents. So I think there's two good markets here that you can choose to work with. And often you'll find someone in one of those bigger groups actually does have a really good connection with one of those independent agents as well. So can make that nice handoff for you. So with real estate, one thing that we do see a lot is we have, especially when they're working for a firm, we kind of have, this is what their sales have been, 2022, 2023, and 2024 year to date. However, sometimes when they're working for these real estate firms, if they do so many dollars in sales, they're also eligible for bonus dollars. And that, again, kind of relates back to some aspects of the insurance industry, in some situations as well. So this case study, we had someone, and so in 2023, they made $100,000, and then they got a $25,000 bonus. Now they do have a group plan through the real estate office, but it is limited in what it offers to $5,000. So we know just based on this $100,000 salary, they're making a little over $8,000 on a monthly basis on average, plus adding in that 25,000. So we know we have some opportunity there, looking at potential, making about $10,000 on a monthly basis if you were to average out the base, their 100,000 plus that $25,000 bonus. So what we did here, and the nice thing with the software, is it will figure it out for you. You don't have to go and try to manually figure out how to calculate in, what someone has. And, I'm not good with calculators, so I wouldn't want any of you guys to have to deal with that either. So we have that built in where you just put in, the group plan, 90 days, 10-year, here's the benefit, or if it's a percentage, putting that information in. Oftentimes, if it's a percentage, I will actually go and calculate that out myself, just because when we know we have situations with bonus dollars, we know that group plans do not cover bonus dollars in most cases. So being able to separate that out to still look at that full picture of what they're eligible for is going to be really important. So this case we did as a 35-year-old realtor. We were able to offer her an additional $5,000, $5,055. Now, a little bit over that $10,000, but looking at the group plan that she had and how we were able to figure this out with a 90-day, 10-year, we're able to cover most of that gap for her. And a little bit extra than we originally planned on, just because the group plan was paid for by the company. So her benefits were taxed. So we're able to offer just a little extra coverage here for her. So we can see here, adding on some riders. Another one that I am very fond of is the residual benefit rider. A lot of times when people think about disability, they right away imagine that, well, if I'm not able to work, I just won't work and I'll qualify for Social Security disability. Well, we all know in this industry that's not the easiest or the quickest process. So adding on that residual rider where, maybe she's able to meet her elimination period, but she's not fully disabled. She still can work, but she's limited, maybe to part-time. The nice thing is this residual rider actually would pick up on the front side of a claim where she would not have to be fully disabled in order to receive some type of benefit. It also can be used after a claim to help transition back into the workforce. So kind of having that dual opportunity for potential use is something that is very attractive to a client, because we often think of ourselves like, if we're not able to work, we'll still figure out some way to be able to do part of our job. Even if we know we really can't, we always will try to figure that out. Like, if you ever tried to work on your computer, laying on your couch, You might be able to do it for about 10 minutes every hour, and that's about it. But people will try to keep working to avoid going on disability. So this allows them to take that time that they need to get better so they can re-enter the workforce, at 100% and not have to worry about that scare of, if I do go part-time because of this disability, I'm losing money. And rather than having them just decide to go on disability full time, we're helping them transition back in, at ease based on their plan for recovery. So great opportunity here again, nice size case. So good for your clients. Next, I want to talk about information technology. Now, this industry we know is going to continue to grow. There's going to be new things every year, new opportunities every year. And I think if you were to call any college in America and ask them how many students that they have enrolled in their IT programs, and if you were to be able to ask them what those numbers looked like 20 years ago, I'm pretty sure we would be probably 300, 400, maybe even 500% over previous. So we know this is a big booming industry. However, another thing that has came up with this industry is the ability to work independently for yourself. A lot of companies are very willing to hire the right IT people for whatever their needs are. And they may not be in your same city or state. They may not even be in the United States. They could be in another country. So we know there's a lot of looks out there. There's lots of things that people are considering. And we also know that these people that work in information technology know that they're wanted, right? It's a very attractive job field. They can ask for more things than most of us can, just because of their situations. So this case study, we actually have a 24-year-old male. So, not too far out of college. He is a web developer and he actually works 2 part-time jobs. This one, his first job he took right out of college. He was working W-2 for a company, but quickly saw once COVID hit that he had the opportunity to make way more money working part-time at 2 companies versus full-time at one. So the one question that always comes up here is, how do we look at that? Do we have to look at the income separate? If he's working 20 hours with ABC company and he's only making $60,000 a year, and then, he's working 20 hours, making $90,000 with another company. It doesn't matter in this. Since he's working in the IT space, we're looking at the same occupation class. Since he's working full-time hours, we consider him a full-time employee, even though he doesn't meet that classification from one company. But we see he has a higher income. Now, that is great. If he's able to make that much more money by going part-time. But the one thing, especially with these younger people, is they don't think about the benefits. When you work for a company, you often get, group insurance, group life insurance, maybe a group disability plan. And the one thing that they kind of see past, they miss a lot of those things because they've never been in a full-time occupation that has offered those benefits before. So it becomes a great opportunity for you as an agent to ask about, as either one of the companies that you work for, have they mentioned benefits? Sometimes companies will offer them on a part-time basis. Or have you looked into typical benefits that you would or maybe would need to have moving forward? A lot of times they have no idea. That's unfortunately something that is not taught in any type of school about what things you should look for when you apply for employment somewhere. So in this situation, it actually gave this agent an opportunity to sell life insurance benefits, but also sell disability. Now, with disability, we were able to offer 2 plans for this client. We did the short-term DI plan to offer benefits right away, so $1,000 a week. We did just for those 90 days. that cost a little over $45 for this client. And then we did a full-time plan, which took them all the way to age 65. We did add in some riders that guaranteed insurability and that residual again. Here we also did offer the return of premium. So that premium took us here to $141. Now, the attractiveness of return of premium for a young client is definitely a great thing, because one thing that they look at is, I'm already planning ahead for my retirement. I know retirement is not going to happen at age 65. I'm looking at, different investments. I'm looking at different tools. I'm overfunding a 401k or a Roth IRA, whatever it is to plan. Well, this situation, we worked with the agent to let's position that return of premium as another retirement paycheck. And so we talked about how, protecting the paycheck now helps protect the paycheck in retirement. And so we used the ROP, kind of showed them, what this would look like at age 60 when this policy does expire, how much extra money he's getting to invest back in his paychecks. And so the client was very interested in that because, again, protecting his paycheck now, but then also something else that is preparing for the future and that retirement paycheck. So don't be afraid, to use that ROP actually as a stronger benefit, especially with younger clients, because they're going to be very interested in it once you kind of spell out that it is a retirement paycheck for them. And the last case study, I couldn't let this meeting go without throwing in a little Husker love on the screen for you. But I want to talk about food trucks. They're everywhere, right? This is I'll say a fairly new and a growing industry, but it's one that has a ton of opportunity for your agents. Now, I know a lot of bigger cities do a lot more things than they do here in Lincoln, Nebraska, but we actually have an area of town that is set up for food trucks. So if you wanted to go and take your family today, I know it's rainy out there, but maybe for lunch, you really want a funnel cake. And someone else there in the office really wants one of those nice, fresh, hot corn dogs. Someone else, wants a little barbecue pork sandwich. There's food trucks for everything. So, it's kind of like going to a food court at the old malls. You could choose from many different options. But the food trucks we're seeing become a really big player in lifestyles because they have the ability to go anywhere, right? You could have them set up in front of a concert venue and probably sell out. You could have them set up at a park, just like the old-fashioned ice cream man rolling around, ringing his bell. It's definitely going to attract customers. We've seen this grow quite a bit, and we've also seen where food trucks they've started off with one that they fixed up, and now they're ready to purchase a second truck. And so this case study actually was that scenario. And this is a case study, actually a real case study here in Nebraska. So this situation, we have this 52-year-old male who ran this very successful taco food truck for 5 years, has done great things at the stadium here, and surrounding venues. And he'd recently purchased another truck to expand up into Omaha, which is the other big city here in Nebraska. So if we think about a food truck, well, if we're buying a good quality one, because, for learning from his first experience, he wants something that has better ventilation. He wants a better stove, better refrigerator, maybe a different type of generator that keeps the truck from getting so hot.
Christy,
yep.
real quick, we're done. We have just a couple minutes left. Sorry.
Oh yeah. Yep. No, you're good. I'm just almost done here. So this situation, what we did, we looked to offer 2 plans for him. We did the Century Plus to cover his income. So we wanted to cover a chunk of his income, but we also offered a business overhead plan that covered the food truck and insurance payments. So making sure he has coverage on that new truck. So great opportunity for him to get coverage on those vehicles as he continues to grow his business. So again, looking for those newer occupations that haven't existed really in the past, but are really starting to make a big impact on our lives. So with that, that's all I had for today. Does anyone have any questions?
Christy, I have one quick one. Earlier, you mentioned short-term disability. What product do you use for that?
So it's called our income protection plan.
Okay. And is
I
that
can-
on your software?
It's on a different platform. It's on our Quick Start platform, but I can shoot that link and some information over to you after this meeting.
That would be great. Thank you.
Yeah, that would be amazing.
And I had a quick question, Christy, with the GIR, do they have to apply at any specific intervals to keep that running, or is that just, as long as they're paying the premiums, it's available to them, the guaranteed insurability?
So traditionally, it starts, they can use the first opportunity 2 years after they purchase the policy. So in 2-year intervals. However, if there is a life change, so marriage, divorce, death, new child, those are all opportunities where they could apply outside of those 2-year timeframes as well.
Okay, but they don't lose it if they don't apply after the first 2 years. It stays
Correct.
on. Okay, thank you.
Correct. Great. Any other questions?
I just have one more, sorry. Recently, I've had so many advisors ask me about disability for pregnancies. And the way we understand, or the way I understand it, is it's not an accident or a sickness, so it's not covered unless there is some sort of injury that happens during.
Yep, you're correct. So traditional pregnancy is not covered, I don't think, by any disability policy out there. But if someone, who hasn't experienced a complication before, let's just say they're going in and it's emergency C-section, if they did, if they were out of work long enough to qualify for disability, we would cover that because it's a not planned on thing. Now, if they were planning on getting a C-section, we wouldn't cover that. But any unplanned events facing that pregnancy, we would, as long as they haven't had a history of that condition.
Thank you.
Yeah, this was great, Christy. You gave us some ideas and some groups to look at and different ways to approach it and the needs that are in those we might not have thought about before. So I really appreciate you hopping on and going through that with us this morning. I know it's a really early day for you today, so.
Oh, it's great. It's great. So perfect. Well, thank you again, everyone, and have a great day.
Yes, you too. And you'll be back on with us during our mastermind. So we do have a disability mastermind that runs for 4 weeks in July. So it's weekly. It's a nice hour and a half long meeting where we take a really deep dive into disability, how it works, really some of the more of those positioning conversations, things like that. So we look forward to seeing you again soon with everybody on the mastermind. And then next month's Wednesday webinar will actually be around, and Christy touched on a little bit, those pieces of a DI policy. So what do all those different riders mean? What pieces are included? What do we have? What kind of language do we have to look for in those policies? So we'll get into that next month. Thank you all so much. I hope you have a great day.